The most effective way to analyze the market is through top-down analysis. And top-down analysis is simply looking at the big picture on the higher time frame and then scaling down to the lower time frame for entries. It is important you know how to do top-down analysis as a trader, whether you are a scalper, a day trader, or a swing trader, because it will help refine your entry and exit points. Alright, so in this video, I will take you through a step-by-step guide on how to easily do top-down analysis, and I'll also be explaining how I caught this trade on AUD USD. Alright, let's dive into the video. When doing top-down analysis, the first thing you must consider is the market structure. We need to know the structure of the market. Is it a bearish structure, a bullish structure, or a ranging structure, a sideways structure? And now let's go to the weekly time frame, the higher time frame, and we progress down. We check the structure of the market on the weekly time frame, we confirm on the daily, and like so. Okay, so on the weekly time frame, I can see that this market is in a bearish structure. The market is bearish. The market has been creating a high, a lower low, lower high, lower low, lower high, lower low, lower high here, lower low, lower high, lower low, lower high, and lower. No, there's no lower low. So price hasn't taken out this previous lower low, and now market plunged into a ranging market. So the market started ranging here. That's what it's doing on the weekly time frame. But I want to confirm if this current high is higher than the previous swing high. If it is, that means this market is likely to change direction to the uptrend, change direction to a bullish market. And already, let's check it. So we can see that this current swing higher than the previous high. So that indicates the market is likely to change direction to the upside. I can see an imbalance here on the weekly time frame. I see an imbalance, a fair value gap. So now market is going to trade down to this imbalance to mitigate this imbalance before going up. Market is going to mitigate it before going up. So this is my point of interest on the higher time frame. On the higher time frame, it's my point of interest, POI. So I'm expecting price to come down to this. I'm expecting price to come down to this point before seeking to buy this market. All right. So now we'll go to the daily time frame. We've known what to expect from the weekly time frame. Now we'll go to the daily time frame to confirm this move, to confirm what we've observed. Now moving to the daily time frame, we can clearly see that the current high took out the previous high here. The price took out the previous high. This is the previous high. And what did it do to the previous low? Price liquidated the previous low. Now this is telling me that this market is in an uptrend, so this market is going to buy. But currently the market is selling. The market is likely to sell. So this is our point of interest. So the overall trend is a buy trend. Yeah, that's because of this change of character. Is a buy trend because of this change of character here and the sweep of liquidity. But currently we are going to wait for price to come down to our point of interest before we can start looking for buy entry opportunity. Yeah. Now on the daily time frame as well, we can see a fair value gap as well on this point of interest. We can see it here. We can see modified very well, and also an order block. I can see an order block here. This is an order block at that point of interest. So this is a strong point of interest for me. When price come down to this point, I'll be looking for buy entry all the way up. So now let's move to the 4-hour time frame to clearly see what the market is doing. Now on the 4-hour time frame, it showed that the market is actually going to sell because market took out this low here, created a change of character. Look at the structure of the market before taking out that load. On the 4-hour time frame, the market has been creating a low, a high, higher high, higher low, 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 higher high, higher low. Now higher high, the market didn't create a higher low, rather it broke the previous higher low. It broke the previous higher low, retraced up and started dropping. So now this market has created a change of character and also a break of structure on the 4-hour time frame. A break of structure. So a break of structure is a confirmation of a trend. Break of structure is simply the confirmation of a trend. So break of structure is just the confirmation that the change of character was accurate. It's confirmation of a trend. Now we can see that this market is now selling. It's going to sell all the way to this point. But how do we enter? We have to go to the lower time frame to look for entry. So on the 1-hour time frame, what is the structure? We can now see on the 1-hour time frame that market is creating, this is a high, a lower, a lower high, a lower low, lower high, lower low here, lower high, lower low. So if we want to enter this market, we're going to wait for a lower high. We're going to wait for a lower high, and I'm seeing a fair value gap here where the market is likely to trade back to before dropping again. So it's likely that this market is going to come back up here before dropping here. Then we'll put our stop loss here and sell all the way down to our point of interest. As if we're taking this trade on the 1-hour time frame. Now we'll also go down to refine the entry more. We go down to the 15 minutes time frame to see what it's doing. Okay, the same thing with the 15 minutes time frame. The place where I marked the fair value gap on the 1-hour time frame, there's also a fair value gap there on the 15 minutes time frame. You can see it here. So that is the space. There's an imbalance where price is likely going to trade back to before dropping. So we'll wait for price to trade back all the way to this point. Then we can start selling again. That's what we're going to wait for before we sell. So we can set the pending order, a sell limit, and when price comes, it triggers us all the way, or we wait for entry confirmation. And now that takes me to how I entered the trade, how I caught the trade on AUD USD. So what I did on the 4-hour time frame, when I saw the change of character, I waited for a retracement to this fair value gap here, this imbalance. You can see it clearly on the 4-hour time frame. After the change of character, I saw this fair value gap imbalance. I went to the 15-minute, the 1-hour time frame, and I put my pending order here. This was how I took the trade. I set a pending order. This point, I set a pending order at this point, and my stop loss was here. Took it all the way down. This is my TP1. Price hasn't gotten to my TP1 yet. This is my TP1, and this is my TP2. That was how I caught this trade. And also I added more position on the 15-minute time frame when I saw the change of, I saw a confirmation entry here. And this is the confirmation entry. I'll explain that in detail in subsequent video. So when price was creating on the 15-minute time frame, what price was doing was creating a low, a high, lower high, lower low, lower high, lower low, lower high. So this market was in an uptrend on the 15-minute time frame, but I waited for, after price triggered me here. So I saw a change of character here. If we go to the 5-minute time frame, we'll see it clearly. I saw a change of character here. That made me added more position at this point. And let's go to the 5-minute time frame. So on the 5-minute time frame, when I saw the change of character here, I added more position because price retraced back and started dropping all the way, dropping to this point. So this is how top-down analysis helps you get better entry. It helps you get a better entry. And the confirmation entry, the secret to the confirmation entry is that the trend in the higher time frame should correspond with the trend on the lower time frame. When you've seen that confirmation that the higher time frame, maybe the higher time frame is a bullish trend, and you scale down to the lower time frame and you confirm the bullish trend, that is your confirmation entry with a change of character. How do you find that? You wait for a change of character, then you enter. On the weekly time frame, we spotted that the market was going to sell to this point of interest, right? Then we scale down to the lower time frame, the 15-minute and the 5-minute time frame, to confirm that movement that is actually going down, and that is how we got our entry. It's amazing to know how to do top-down analysis. All right, a quick recap. We go from the weekly time frame, we observe the market structure, the structure of the market. Is it a bearish, bullish, or ranging market? We observe the market, we mark our points of interest, we mark our points of interest, what the market is likely to do. We go down to the daily time frame to confirm what we saw on the weekly time frame, to confirm that move, and we can see that in the daily time frame, the market is actually going down to the point of interest. Right now, we scale down to a lower time frame. So we can look for entry confirmation. Now on the lower time frame, we spotted a change of character and a break of structure on the 4-hour time frame. Is a change of character and a break of structure. Then going to the 1-hour time frame, we go down to 1-hour time frame. We're looking for entry. Now on the 1-hour time frame, we spot another fair value gap, an imbalance here where price is likely to come to fill before we enter. So we can also scale to our entry point, our entry time frame, which is the 15-minute time frame. We can set our sell limit pending order here and put our stop loss above the previous high. So this is a setup to watch out for. AUD USD, we're expecting price to move back up. Here before we sell. So this is my expectation for AUD USD. All right, thank you so much for watching. If you found this video helpful, kindly like, subscribe, and turn on the bell notification to get more content like this.